Greetings, members one and all of the Salivation Nation. Can the surging demand for gold and silver last? Likely so, as the COVID-19 lockdowns threaten sales and prices. Let's explore. You know, psychology is a very interesting thing. You've heard me talk on this channel many times about how the markets themselves are driven largely by irrational forces known as psychology. And certainly that continues on even through crises that we're seeing right now. But also, there's something about if something is rare, people want it. Now, aside from rhodium, most people out there aren't really into rhodium, but I wanted it because it was rare, but mainly silver and gold. You know, when silver prices were lower, and especially when we saw the $11 and some odd cent price for silver, people, those who hate silver were laughing because, oh, there's where silver is, but the actual demand for the metal went up. And in fact, most of the markets looked at silver as an industrial commodity. And it still is. That has not changed. But certainly the way it's been viewed by the markets, I believe even more so these days than ever before as a commodity. But the physical demand is a realization that it's money. And I believe that people are trying to accumulate it in the physical demand, with not only because of the lower spot price, hoping to find some deals, but even when the prices have been jacked up. For many reasons, people are still wanting silver, and by the way, gold too, and platinum. We've seen a surge of platinum, even in this community. But let's take a look at this article about this and some inside information that I have as well too, with regards to backing up the claims of what this particular Kitco piece is by Anna Golubova. The COVID-19 panic triggered a resurgence of physical gold and silver buying. But can this surge in sales last as mints and refineries across the world are temporarily shutting down production in an attempt to fight the spread of the virus? As gold and silver prices plunged, along with equities about 2 weeks ago, many investors started to take advantage of lower prices to replenish their precious metal stashes. COVID-19 panic also helped with demand as a possibility of a deep recession encouraging more buying. Retail interest in silver and, to a lesser extent, gold picked up very strongly last week, said Rana O'Connell, INTLFC Stone's head of market analysis at EMEA and Asia regions. Physical silver demand is seeing a massive resurgence on lower prices, O'Connell noted. Silver has taken one of the biggest long-term hits in price across the whole sector, she wrote on Tuesday, and boy, is she ever right on that. This very sharp fall has brought retail purchases out in troves. Increased buying is seen both in Asian and North American markets, with many mints and precious metal stores saying they are running low on inventory. However, anecdotally, I've been seeing evidence of some of these bullion dealers, some of the emails I've gotten. We've got eagles in stock. We've got eagles, but they're at very high prices for sure. Increased buying is seen both in Asian and North American markets, with mints and precious metal stores saying that they're running low on the inventory. Coin and bar sales have been picking up very strongly, and there's been a big resurgence in silver demand in India. You heard me talk about that yesterday, which is the world's largest silver consumer, typically with a 20% global market share of jewelry, silverware, and bars and retail investment, O'Connell said. Far Eastern activity is also strong, and the latest figures from the U.S. Mint show a huge uptake in Silver Eagle coins. The U.S. Mint reported silver coin sales of 4.83 million ounces so far in March, which is nearly 4 times more than last year's monthly average of 1.24 million ounces. Just amazing, the demand. This is actually good news. It means there's faith in the metal as money, as a hedge against economic instability. The U.S. Mint's gold coin sales showed 230,500 ounces of U.S. Eagles sold so far in March versus last year's monthly average of just 12,583 ounces. It's amazing demand there for gold, too. And here are some charts that show the U.S. Mint figures, and they're kind of blurry here, but it kind of gives you an idea of the spike there. This is a welcome sign that investors are preparing to come out into the market and bargain hunt, and that the markets have not completely ground to a halt, said O'Connell. But she warns that this hyperactivity might not last as shutdowns of stores and refineries sweep precious metal businesses across the globe. Lockdowns mean that it may not last. It is unlikely that this massive pace can continue to an extended period, especially given the state of the Mumbai Bazaar, for example, she wrote. India is in total lockdown, and at its grassroots level, Singapore is similar to Dubai in India. Most of the stores in India will remain closed, at least for the rest of the week. Mumbai's Zaveri Bazaar, which is the largest bullion market in India, was closed until further notice. Also, Titan Company, India's biggest jewelry by market value, has shut its doors until March 29th, Bloomberg reported on Monday. The lockdowns in India could lead to the lowest gold sales in 25 years. Total sales could drop by as much as 30% in 2020, down from 690 tons reported last year. Bloomberg cited North Anathema Padmanabhan, chairman of the All India Gem and Jewelry Domestic Council, who said sales look grim. Last year itself was a very bad year for July, and this year we could have lost this month. Padmanabhan said. April is going to be the same, with May, June expected to be weak. On top of that, the recent shutdown of 3 major gold refiners in Switzerland's Ticino had a knockoff effect on prices Tuesday. And I believe they are Valcambi, Pamp Swiss, and Agrero Heraeus. And I know that Pamp is a Switzerland. And so that is the shutdown there. The 3 refiners in the region process 48 million ounces of gold per year, equivalent to 43% of global annual mine supply. SP Angel analyst wrote on Wednesday, refiner shutting down is something rarely seen, not in war or the great financial crisis, and in addition, how quickly it has happened has taken the market by surprise. Major shutdowns like these are creating a tightness in the physical market, noted Colin Hamilton, Managing Director of Commodities Research at BMO Capital Markets. That just proves it. Anybody denying that there's not a short supply is just running a fool's errand, because it is there. And it is a matter of fact. It's not about bullion dealer greed. It's not about being raped by premiums. These are real tight markets. This is unprecedented, never seen before. We received a number of questions yesterday about the physical tightness in the gold market that caused significant differential between the COMEX gold futures and OTC spot price. This was a knock-on effect from the shutdown of the Ticino refiners in Switzerland, which has limited the ability to produce the appropriate weight of bars for good delivery against near-date positions on the COMEX contract, Hamilton explained on Wednesday. And it also comes to a surprise, and I didn't realize this, but apparently the U.S. Mint sources silver from outside of the domestic mainland. And if that's the case, that's going to be a tight squeeze on getting silver to produce eagles. Now, maybe the way they say it is they're sourcing the blanks from American producers of blanks, like Sunshine Minting is an American, but I don't know. So it makes you wonder: will there be, with increased demand and lack of supply, these premiums could stay up, and we could see that continued separation of the physical market from the spot price, the OTC spot price. We'll see how it plays out. But with the news that with the actual names given here, I don't know if it's these 3, but my inside source said that Pamp Swiss is one of them, Valcambi and Heraeus shut down. Then we have the Royal Canadian Mint And I've got an email from the United States Mint saying that some of the products are going to be delayed. So my guess is some of their facilities are shut down as well. Not actual confirmation, but the Silver Wolverine mentioned that a source that he had said that was the case. But we'll see what happens. A lot of these bullion companies, refiners, distributors, everybody's being affected by this market. And what's that going to mean? For those of us who are in demand of the metal, we're going to be paying higher prices. It's just the way it is. And so stay tuned. You can either want to do one of two things. We just had a report of record job loss, 3.2 or 5 million jobs lost, as a report has come out today. What does that mean? We're headed for, it goes without saying, we're going to see a recession. How long will it last is anybody's guess. And will the stimulus help? Will it save us? When will we open again as a nation? Will we be able to open by Easter, as Trump has said, at least in major parts of the country? Regardless, we're going to be affected for quite a while, which means that the physical prices could go, the spot prices could go up, but the other prices for the physical markets could continue to climb too. Along with it, the premiums could be here for quite a while, which means we could see exploding gold and silver prices. So the question is do we buy now or wait for it all to level out? My advice to everyone here that is questioning what to do is to have a complete and full understanding of what you're doing when you purchase precious metals. Never purchase anything that you don't understand the markets that come into place, because you can buy a silver eagle now at $27 or $28 an ounce, maybe even $30 an ounce. It could be a great deal for the prices that could be coming around the pike. Or you can buy that eagle right now and everything levels off and it comes back, and in 2 weeks' time you could buy that same eagle for $20 an ounce or $18 an ounce. Understand, those are the extremes that you could be dealing with here when you make a purchase of precious metals. It could go one of two ways, or stay right where it is now. So understand, we are living in a new reality now, and it's a reality of shutdowns, lockdowns, and weird markets. So that is the news of the day, and here where we sit with the markets. Post your thoughts below. And again, my prayers and thoughts go out to all those affected by this virus, and that everybody stays safe and stay healthy. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.